Hey guys, this is Toby Mathis coming to you live from one of our executive retreats for our 360 members of Infinity Investing. One of the things that's a reoccurring theme out of this particular group is what do I do with all the cash that I have in my savings and in my checking accounts? There's a lot of folks who don't trust banks right now, and it's coming up. What do I do with my cash? And so I'm just going to lay it out for you of what I'm telling people and what we explain as a group with Infinity Investing and our philosophy on what to do with your capital. So right now, your cash is like an ice cube. It's melting on an annual basis. According to our government, it's melting at about a rate of 8% a year, meaning that inflation is cutting its purchasing power of that cash by 8% a year. So if you had $1 million of cash at the beginning of the year, at the end of the year, has purchasing power of $920,000. That's kind of a wake-up call for some people because they're going to realize if it's sitting in a savings account where you're making 0.025, it's not combating that melting, which is inflation. We've never had inflation this high. If somebody says, hey, it's like 1982, this is the last time inflation rates were that high, you need to know that the way they calculated under the CPI inflation in 1982 has changed dramatically compared to the way they calculate it now. If we were using 1982 calculations, we're closer to 15% inflation. It's not even close. We're absolutely getting crushed with inflation, which means your cash is melting at a rate that's never been before. It is melting as fast as any time in our history, which means you need to protect your cash. And the way you protect cash when you're in an inflationary cycle, there's only two places you go. One is equities, the other is real estate. Now, real estate's one of my favorites, but I do know that it's hard to get access to capital when you deploy it into real estate. If you need to turn your real estate into cash, it could take months to get that money back out. In a short time frame, like a quick close, is about 2 weeks. So it may not be practical for somebody who needs access to their resources but is scared of the banks. Now, you've all heard of FDIC insurance and things like that. We're really, when you're above $250,000, there are products that you could go to protect yourselves, but I'm not horrifically worried about that if I get away from banks. And the way I get away from banks is to go into brokerage houses and to buy securities, to buy equities. There's a lot of different ways that you could structure an account where it's still safe and secure and protecting you from inflation by buying what we call blue chip portfolio. You'll hear that term thrown around out there. What we really care about is that you're invested in securities that are protected from the inflationary cycles. In other words, they can raise their prices easily and they have market share to where it won't matter if they raise their prices. Let me give you a for instance. Apple. Every time they raise the price of their iPhones, does it drop sales? No, because they own that marketplace and they have very loyal customers that are going to come in and they're still going to purchase the phone even if they increase it. So if there's inflationary cycles and the materials that go into that iPhone increase, it's not going to harm that particular company. There's a ton of those. Now, this is what's really critical. I want you to pay specific attention to what I'm about to tell you because it's not something you've probably heard before. Once you have a blue chip portfolio, you can leverage that portfolio not via a margin account, but via something called a security-backed line of credit, where you can get up to 75% of that account value back to yourself if needed in cash. And I didn't just misstate that. If you have a portfolio and you take $1 million portfolio, you could get access to about $750,000, boom, if you need it, if you're in a pinch or if you have another opportunity. So one of the clients I was talking to is a real estate investor. And they're sitting on a lot of cash and they're saying right now it's hard to find deals. They don't know when the next deal is coming to them, but they know they want to be liquid enough to take advantage of it. But at the same time, they're scared to death of their money losing value as it sits there and the inflationary cycle just keeps pushing that cash value down. This is the perfect solution. Is you go in and you build yourself a blue chip portfolio, fantastic portfolio of equities, preferably that are also paying a dividend. And by the way, when I look at dividends, I want to see 2% or greater. These security-backed line of credits, one of them that I look at is with UPS is a 1.99% interest rate, which means I build a portfolio. Even if I borrow, let's say $500,000 off it and I'm paying 2%, the dividend off of that portfolio pays the interest. And then I'm getting all the growth as an aside to compete with the inflationary cycle. In English, I still have access to all my cash. It's not costing me anything. And I'm protected against inflation because equities rise when inflation goes up. Real estate rises when inflation goes up. This is a perfect scenario where you'll have access to your capital, if needed, via the security-backed line of credit, and you're still in the market so that you are protecting yourself from inflation. Now, we can do the same thing to a certain extent with real estate by getting a line of credit against it. A lot of folks know what a HELOC is, a home equity line of credit, where you're borrowing against the value and the equity in your house and you're deploying it. We're seeing interest rates start to tick up into that 4%, 5% range, which may be a little too heavy for you. But if you were invested in real estate, you might want to consider locking in some of these historic low interest rates as we speak. You might be looking at establishing a line of credit, and then you'd only pay that interest if you access the money. It's so much easier with securities. I'll just say that as long as you have a large enough account in a particular type of securities. It could be ETFs, it could even be mutual funds, it could be bonds, it could be a blue chip portfolio of different securities, everything from your Costco to your Starbucks to your Microsoft to, you name it. If it's a good company, chances are they'll use it as security because they know the market's going to continue to rise as inflation rises. But inflation is very much like gravity, and it's going to keep pushing these other companies down to earth. And if you're in a company that has weak financials, that hasn't been profitable and hasn't been paying out a dividend, it's going to hurt those. To everybody else, they're already strong enough. They don't feel that added amount of gravity. So you want to have a blue chip portfolio. You want to establish a security-backed line of credit against it. And now you have easy access to inexpensive money. And again, the dividend that portfolio creates should cover any of your interest costs, along with having the actual loan against your securities. So that's just one of the ideas that's coming out of our executive retreat. And we hope to see you here at some point to one of our executive retreats. They are absolutely free for our 360 members. And anytime you want to join, just go to Infinity Investing, free basic membership, and you can always get that 360 membership as well. And then we can see you at one of our executive retreats.